Hey guys, Jeff with OptionBoxer.com. Back with a follow-up video to a video I posted last night. In that one, I looked at trading long vertical spreads and doing them in the manner that I'll share with you here momentarily. If you haven't had a chance to see that video, it's on my channel. It's called Simple Option Strategies We've All Used, and the secret is it does not work. Again, I was looking at long vertical spreads there. In this particular test, I want to look at short vertical spreads. I won't waste too much time. Before I get into it, please know I'm not a registered financial advisor, and this video is in no way a recommendation for you to attempt any strategy or place any options trade or any trade. So just make sure you understand the risk prior to trading. So trying to use the same criteria and the same information that I used in that last video, I wanted to keep it as similar as I possibly could. I wanted to start with an account balance of $1,000. I wanted to risk less than $100 on each trade. In the short vertical test that I'm running here, I wanted to maintain a 50-50 risk to reward profile. The criteria was exactly the same. I just wanted to see price close above or below the 9 EMA on that day for me to warrant entering a position. And I was going to use the 10-day 1-hour chart. For my rules, I was going to hold it to expiration. If you did see that video, you'll know that I didn't want to hold more than 5 days. With short verticals, a lot of the premium is captured in those last couple of days before expiration, so it just made sense to hold them. If I held them for 7 days, I could get into a position on Friday and then hold through the weekend, which give me a little bit of a premium bump there to get the 50-50 that I was looking for, and then of course hold them all the way till the next Friday. And then again, looking at short verticals here, whereas in the last video we were looking at long verticals again. You can see I've already done the test here, and you can kind of see right now that it was profitable, and it worked pretty good considering we only had a 51% win rate. In the long vertical spread test I did yesterday, I think we had a 53 or so % win rate. So we had less wins, but we had way more profit. If you remember that video again, I think we lost $4 or $5, and we took a lot of trades to lose that $4 or $5. So it was great for the broker, I guess, or the brokerage, because they made a lot in commissions. Not great for me, the trader, because I didn't make any money. But we'll take a look at this again at the end. I'll show you what I did and how I kind of set these trades up. We're going to track the P&L kind of in this quick makeshift spreadsheet that I've got. We're going to track wins and losses, total commissions, which you can see is $260, and then the running account balance. And we'll come back to the spreadsheet at the end. But for the sake of this video, AMD, actually, I just pulled this up a second ago, actually would have been a candidate to enter with the short call spread. And so all I was looking for is I wanted price to close above the 9 EMA, at least one candle on the day that I'm looking at it. And then I wanted it to close below for at least one candle. So you can see it cross below here. So this would be a candidate to enter at 7 days to expiration, and again maintaining the 50-50 reward profile. So oftentimes I did have to go into the money a little bit to get that 50-50, and I don't know if we'll get filled right at 50 cents or not, and we did. So we were able to get right at our 50-50. And then at this point I would take 9 other trades that look just like that. I would go through my list here, and I only use this list, just so you know. And I would look for 9 other setups just like this, and then I would just simply fast forward to the next week and see how it looked out of those 10 trades. And I'm not going to make, for the sake of time, I'm not going to set up all 10 different trades. I think if you saw the last video, you kind of know what I'm doing here. And if you have questions, you can always ask me in the comments. But it takes a little bit to load up. On demand in Thinkorswim can sometimes be a little bit slow, and it's been acting a little bit slow today for me. But we'll let this load up, and then we'll see how this one position did. And you can see it didn't go well, and so that's just part of it. But keep in mind there would be 9 other positions to potentially offset that loss there. But that's how I looked for trades, and that's how I placed them. And I did 10 of those, and I did that over the course of essentially 10 weeks, because I would enter on a Friday and then wait till expiration the following Friday. And you can see the first round of trades I had here was very scary, and it got me to thinking, this is kind of indicative of real life trading. because a lot of times we start out with a new strategy. We've got all our rules and our plans in place, and we're ready to kind of jump in the water there and start trading. And immediately you can see just a staggering loss. And I don't know why that happens, but more often than not, I believe it does. Anytime you start something new, it goes wrong way more than it goes right. And maybe I made some unconscious adjustments to correct that in the weeks ahead. But regardless, I think that's true of real trading as well. You jump in and it goes completely against you, and then as humans we're like, well, that was painful, we don't want to do that again. So then we adjust and we kind of abandon the work we had done to create the strategy in the first place. So you can see it started off really bad. I only had one trade that worked in my favor, and 9 of them did not. And so you can see our account balance took a big hit right out the gate. But then over the next 2 weeks, I was able to battle back and get back above our starting account balance, and then kind of up and down a little bit throughout the remainder of the challenge here, or the remainder of the test here, I should say. Our maximum drawdown was 38%, and our maximum upside was 27%. And then we ended up finishing at about 18% return on capital, which is a pretty good return in about 2 months' time. And only on $1,000. If you had a $10,000 account, that would of course be 1,180. Or actually 1,800, I guess, would be the return there. And so you could do the math yourself if you wanted to calculate it based on whatever your account balance would look like and how much money you wanted to commit to this particular strategy. But some of the key takeaways I had here, and kind of always thinking about how you can improve something or how you can make it better. I think the most obvious one is if you find trades that have high volatility where you can always take short verticals out of the money, is only going to give you a better win percentage. And so a lot of times I had to take trades that were in the money just to get the 50-50 reward profile. But if you get assets that have a high volatility and you're able to maintain that 50-50 risk reward profile and stay out of the money, I think long term that's going to give you a little better win percentage. And of course, it's going to impact your bottom line positively. You could also try to improve this strategy by lowering from a 50-50 risk reward profile to, say, maybe a 40-60. I would hesitate in my own trading to go much below that. I've tried it. What ends up happening for me is if I go, let's say 20-80 here, I'll have a great win rate, but the few losing trades that I have, it more than wipes out any gains that I've been able to receive on the 8 out of 10 winners that I had. So I may have an 80% win rate or a 75% win rate, but the few losers that do crop in or sneak in there far outweigh the gains on the winning trades. So again, kind of adjust that just a little bit to account for that. You could be a little more microscopic there. You could go 48 to 52 or whatever risk reward profile you want to look at, and you could do it however you see fit. But I think at the end of the day, in kind of this random market, I guess there's a random walk theory. So no matter how great your technical analysis is, or whatever chart setup you look at, maybe many of you have a great one where you can predict the move of the market, at a 70% rate. Or whatever it may be. And of course, if you can do that, your profitability is only going to be higher. In this particular test, I was using just the simplest possible strategy, or the simplest possible entry criteria I could, just crossing above or below the 9 EMA. Of course, in my own trading, I use a much more complicated approach, and sometimes that's good, sometimes that's bad. And at the end of the day, I think more often than not, I find myself around this 50 to 55, maybe as high as 60% win rate. But it's nice to kind of confirm that if you traded just short vertical spreads and you held them to expiration, even at just over a 50% win rate, you can still be relatively profitable. In fact, in this particular test, 18% profitable, which is a really nice figure for a short period of trading. Of course, do that over the course of a year, and you can see where that 18% really starts to add up. But that's all I got for you guys. Again, wanted to make a follow-up video. I do hope that if you like these videos, you'll please consider liking and subscribing to the channel. It does, of course, like I always say, really help me out. And if you've ever had a YouTube channel, you know how impactful it can be. for the people creating content to subscribe to their channel. But all that being said, I do appreciate you taking the time to watch. And if you have any questions, you can reach me in the comments. All right, see you later.